Ethereum is pretty weak. In general, it is a hell of a lot easier to play than Bitcoin, but it likely is not going to be good to play or strategic to play in a counter trend trade to the upside. It is underperforming Bitcoin. It doesn't look like it's doing anything bullish, and it's being rejected by this red line, the 4-hour 10, and it looks like it's getting ready to fall deeper into this trading channel you can see behind me. And this is a good time either on the live stream or recording. If you're new, go ahead and subscribe. Hit the subscribe button down below for seeing pretty charts that are going to give you great guides. And if you are new and you hit subscribe, hit the bell for all alerts so I can keep you in the know on your crypto price action for Bitcoin, Ethereum, and your altcoins. And then returning viewers, this is time to hit the like button here. So Ethereum is going to be easier to play to the downside, in my opinion, because it's in such a nice, beautiful channel. It is underperforming Bitcoin. So even if Bitcoin has a nice move up, the move up on Ethereum is likely not going to be as aggressive, and it will likely just, the most I could see it really doing is a large failure pattern above this line. If Bitcoin were to go up, 10%, maybe Ethereum could go a failure pattern above this line, up 6%. But I think that any fake out during Wednesday through Thursday of this week, because of the high economic impact data, the whales just like to go up, down, back to the middle. I think each of those spikes will be smaller. So the volatility up, down, will be smaller on Ethereum, unless it's to the downside. Then downside moves might be more vicious on Ethereum, right? But Ethereum is just in this channel. And so if you want to try to make Ethereum look like this, I'm on the 1-hour chart, and this goes back to August 6th of this year. And these are your bumpers for Ethereum. And if to layer anything on top, I would simply add the 4-hour 10 for now. It's getting the right direction. If price on let's say the 5-minute candles. Just take a look at this, watch. So this is still the 4-hour 10, even though I'm on the 5-minute chart. Look, price got above the 4-hour 10. When it came back down, did it use it as support? Got above the 4-hour 10. When it came back down, did it use it as support? Came back up. Did it use it as support? Arguably, but no. These candles closed below. Went higher, still didn't use it as support. Went even higher, didn't use it as support. So therefore, this was just a bunch of failure patterns. Like it never used it as support, and it never made a high higher than an initial high getting above this line after using it as support. So the exact moment that you can say the micro time frame will go up on Ethereum, perhaps then going back to this green line here, is when you can see price both get above the red line or the 4-hour 10 and use it as support. So let's say it gets above, uses it as support, and then you get above the first high you make one of the first highs you make getting above it, or the highest high before it was used as support. So you don't have an edge to micro time frame to the upside until this right here is shit. That was not the climactic event that I wanted to look for. It's as this moment right there as it passes this, but it has to use the red line as support. And then after it uses it as support and starts working its way up, you simply look left, and you don't have an edge to the upside until the highest peak is passed after support. But in this level, and so I'm showing you a perfect example of what is not support. None of this was support. So for example, when Ethereum, see how this height went above here, but the reason why at that moment you did not have an edge to the micro time frame upside to trade up, for like a 2-hour trade to the upside, you did not have an edge because there was no support on the red line. Make sense? Is it possible that it does this in the future, comes below it, and just skyrockets up? Yeah, but you don't trade off. You trade off probabilities. All right, and once again, went above the red line, but did it use it as support? These are 5-minute candles. No, it didn't. So did it go pretty high? Yeah, it did. But when it came down, it just fell right through it. And then when it came back up to make another high, it was extremely statistically probable it was going to be a lower high, a high lower than the previous one or this one being so aggressive. It never used this as support, and it couldn't base off of it. And all it did was hit the top of the channel. So if you see something like this happen again on Ethereum and it hits that channel line, but it has not bounced even on 5-minute candles, like it didn't go up and use it as perfect support, closing candles on it or above it, and then go up. If you don't see that and you see Ethereum hit the top of the channel, maybe within a 2% range above it, so maybe not exactly, but within 2%, you can get failure patterns about 2% above the top of a channel. It's very likely going to go straight back down. And so this 4-hour 10 EMA, it helps you understand better the probabilities of using the bumpers. It just is an extra layer of protection for you, protection in form of probabilities. It helps you understand, yeah. So what's the probability of it just hitting this and coming back down? Well, take a look at how it reacted to the 4-hour 10. Did it use it as support and then blast off? Well, then you actually have an okay chance of price, working its way up above it. Maybe it can go like this, and then shit, maybe I need to scramble out of my shorts, because when I look back at the red line, it did base off of it. So maybe I'll get a pullback, but once it starts creeping back up and I see it based off of this, shit, I need to get out of my short and take profit now and just scramble out, because it's probably going to break out. Not probably. It has a better chance of doing that because of the way it interacted with this guide here, 4-hour 10. So using the 4-hour 10 in these bumpers on Ethereum is really all you need right now until it works its way out of this. But if it keeps going down and sideways, you're going to have these bumpers for a long ass time. The only way these bumpers are going to come invalid is if it breaks up and out of it. But right now, it sure as hell doesn't look like it. But again, Wednesday, Thursday, and Friday, expect just rapid volatility going like 3% above this line, then back down. Like it could get really, really wacky. October 12th, 13th, and 14th. Just expect wackiness. But after that, then the rules of how price interacts with this, the 4-hour 10, which is the red line, and the bumpers, then the rules go back to giving you the probabilities. That's all you need right now is this trading channel and the 4-hour 10 for Ethereum. And honestly, Ethereum's way easier to deal with right now than Bitcoin, because Bitcoin's being propped up and it's just chopping around, and Ethereum's got a more slideways down fashion, and it just looks a lot easier, particularly to short right now. Much easier than Bitcoin, and that's all you need for Ethereum until this line is broken and used as support. And this was extra helpful. Please go back to this beginning of this video if you're watching the recording of it. Try to draw those lines, even if it's not as sexy as my chart, which you probably won't be able to make it as pretty as mine. I think it's perfectly parallel, but just try. It's going to offer you a good guide along with the 4-hour 10 EMA. And in order to do the 4-hour 10 EMA, you need to search for an indicator called MTF EMA. And that you're looking for MTF EMA and put on the 4-hour 10, but put it on like the 5-minute candle. That's how you're going to be able to get yourself that edge. It's really all about that 4-hour 10, but not looking at 4-hour candles, rather like 3 and 5-minute candles. That's how you're going to get short-term time frame edges.